The fears of Cardano investors are valid. The ADA coin price is dipping every day. Potential increases are not even sustained. The little momentum it has garnered over the past few days is not commanding enough results in the crypto market. So is it over for ADA? No. In one of his videos, Armstrong popped on the screen to talk about Cardano ADA and the current events that are revolving around it. One of his followers commented that losing BitBoy crypto was a blessing in disguise for him. Well, this was true given the impressive attention to detail and influence that Armstrong has exuded on his new YouTube platform. He examined Cardano from all perspectives and presented a bullish opinion. The sum of what he explained was, do not give up on Cardano. We are quite familiar with what happened to the crypto analyst Armstrong. The influential figure behind BitBoy Crypto announced his departure from hit network BJ Investment Holdings and all of its subsidiary brands, including BitBoy Crypto and Around the Blockchain. Armstrong confirmed the news on his account, joined Coin, and was initially brought to light by Bitcoin blogger Jason A. Williams. Armstrong's exit came amid internal turmoil within his organization. He revealed an attempted revolution led by TJ Shed and Justin Williams, but expressed confidence that they were at a disadvantage. While Armstrong did not elaborate on the details, his comments indicate that he maintains a sense of control despite his exit. Since then, the crypto community has been buzzing with theories about Armstrong's sudden departure. Zach XBT, a crypto fraud investigator, even questioned Armstrong's involvement with various shady meme currencies. Although no definitive connection has been established, the timing of his exit has fueled speculation. Armstrong had previously faced criticism for allegedly selling tokens after recommending them to his audience and promoting risky investments through affiliate connections. These controversies have made some wonder whether his departure is a strategic move to distance himself from potential liabilities. After Armstrong's departure, one of the most disturbing questions was the future of his digital currency, BEN. Irrespective of the speculation about his potential demise, Armstrong quickly dismissed such theories. His statement suggests that he planned to remain active in the cryptocurrency industry, leaving the door open for future involvement with BEN or other projects. The news has sent ripple through the cryptocurrency industry. Adam Kotran, a notable figure in the crypto space, humorously suggests that an impending investigation might be the reason for Armstrong's departure, hence fueling the speculative fire. Armstrong's departure indeed leaves a void at BitBoy Crypto, a platform that had influenced opinions and trends in the cryptocurrency market. While Armstrong's exit raises more questions than answers, one thing is clear: the crypto industry is dynamic. This development marks a significant moment in the cryptocurrency industry and an indication that it is important to watch our own backs. Cardano is an example of a cryptocurrency laden with a swarm of criticisms and allegations. There was a time when many thought it wouldn't survive further because of its unpleasing popularity in the crypto market. Unpleasing in the sense that it is mostly known due to the nature of verbal attacks launched against it. Looking at the situation, it's easy to give up on Cardano ADA, but do the criticisms actually matter? Well, yes it does, for its reputation. A day after hosting a live stream to update Cardano's community members on developments on the blockchain, the Cardano founder Charles Hoskinson, in a tweet on X, reacted to a post that suggested the founder is not confident about the future of Cardano. The user who made this allegation has commented on a clip from a live stream where Hoskinson said CIP 1694 upgrade was important for the Cardano ecosystem. As earlier reported, the upgrade is expected to expand the current governance mechanism in Cardano to a tricameral decision-making body.
The reality is, if 1694 does not pass, I'm out of ideas on the best way moving forward for having an on-chain upgrade system, in which case I don't want to be involved in designing the new one. And so what we'll do on the IO side is we're just going to burn the Genesis keys we have. And Emergo and the CF are going to have to figure out if they want to continue along those lines or not, and it's just, we put our heart and soul for 2 years and work with the community about this. And we think this is the best way moving forward to get things done and move it to a system that is very decentralized and has a lot of upgradability built in. The problem is any deviation from what's been put down would either be regressing to probably a more centralized state or be such a radical departure from the design of Cardano. It would be a commitment to years of development effort. And we're just not going to do that. Somebody else should do that and step forward for it. So the community has to decide on these things. But that's the point of social consensus, is to let people come together, let people have a conversation, decide what's the best approach forward.
These are not the words of a confident at IOHK Charles, and it sounds like a threat, just another way of centralization. I believed in Cardano, not so much going forward. Sad this is a great project, the user tweeted. In response, as usual, Hoskinson fired back at the user, asking how they could have based their judgment on a 1-minute soundbite taken from a 45-minute video. The user apologized and accepted that he didn't watch the entire video. He also promised to watch the complete video and returned with a changed perspective. According to Hoskinson, the tricameral decision-making process is a move geared towards more decentralization. Since decentralization is one of Cardano's strongest prowess, there is no way Charles Hoskinson would not have expressed himself with confidence. Netizens and their weird opinions, am I right? In recent times, the Cardano blockchain has drawn criticisms for its decision-making, which was concentrated in the hands of its Genesis key holders. The new update places that duty in the tripartite bodies of stalkers, delegated representatives, and a constitutional committee. Hoskinson said that this new system will make the blockchain more robust, secure, and closer to full decentralization. However, for community members, the concern has been on when the blockchain will see magnificent developments. Hoskinson had to respond to these concerns and reassure the blockchain is closer to its goals. Furthermore, one of its most recent happenings shows us that despite the number of accusations targeted at Cardano, it serves as a model platform laying the groundwork for other crypto platforms to emulate. Ethereum's co-founder Vitalik Buterin recently discussed the potential protocol and staking pool changes for the Ethereum network, suggesting that they could enhance decentralization and efficiency. However, something happened. His comments drew criticism from Charles Hoskinson and other members of the Cardano community. In his post on X, Hoskinson took a not-so-veiled jab at Buterin by attaching an animated gif of actor Christian Bale and Muppet Kermit the Frog nodding at one another. Buterin's post emphasized how modifications in the staking design could benefit the users who lack the resources to solo stake, allowing them more involvement in staking and consensus decision-making. Additionally, the changes could reduce the consensus layer's operational burden, further decentralizing the Ethereum network. In response, the Cardano community accused Ethereum of attempting to emulate Cardano's long-standing features. I mean, really? Some of them posted that Cardano had pioneered liquid staking and delegating the pools for consensus years ago, boasting about Cardano's uptime and decentralization metrics. Ethereum was mocked for dressing up as Cardano for Halloween by allegedly copying its long-established features. Nonetheless, the community's reactions to the latest tweet are rather mixed. Some agreed with Hoskinson, but others questioned the focus Cardano's community places on Ethereum. Inquisitor Galacta, a Cardano supporter, expressed frustration, noting that the Cardano community seems more engrossed in Ethereum's actions than its developments. However, in the middle of all these things, a popular crypto analyst, Benjamin Cowan, has not stopped rolling out predictions. He recently noted that historical precedent makes it likely that Bitcoin's latest rally would lead to a dramatic correction before the real bull market kicks off, during an interview with Crypto Banter. Bitcoin has been rallying lately, and Cowan explains that this is not because new capital is coming into the space and raising prices. Instead, the analysts argue that Bitcoin is going up because traders are converting their altcoins, which are further out of the risk curve, into Bitcoin, adding that liquidity from altcoins will eventually dry up. He mentioned that Bitcoin will no longer have any buy pressure to sustain its rally. The closely followed analyst said that he is expecting Bitcoin to eventually get rejected at one of its nearby resistance levels before selling off and bringing altcoins down with it. This means that Cardano might go further down too. According to him, Bitcoin usually has a pretty significant sell-off sometime before the halving. I mean, maybe it happens after the halving. I don't know, but the reason it happens, in my opinion, is because liquidity has gone. So I think the reason Bitcoin is going up right now, it's not because new money is coming into the space, but because if new money was coming into the space, wouldn't the total market cap have gone higher? So the total market cap has stayed the same. Benjamin Cowan noted that the reason that Bitcoin is going up is because people are converting their altcoins to Bitcoin, hence the rise in Bitcoin dominance. But the issue with this development is that all the liquidity in the altcoin market has been bled dry. This explains why there is no liquidity left in altcoins to buy Bitcoin. With this development, when Bitcoin goes into a risk-off environment again, and all of this prior money that was sitting in the altcoin market that was there to scoop up cheap Bitcoin, that money is gone, and there is no longer a bid. Cryptocurrencies are on a roll, and we're not quite sure what side Cardano ADA will find itself when this is all over. But one thing's for certain, Cardano ADA is not worth giving up on. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.